Pretty much every single new investor makes this exact same mistake when they start out. In this video, I'm going to cover the typical investor journey from newbie to expert and all the mistakes that you're probably going to make along the way. So if you watch this video until the end, I can pretty much guarantee you that I'm going to save you money because I know for a fact that you're probably going to make these costly mistakes. I've personally made them. I have a portfolio of over $2 million right now. I've made them, I learned from them, but if you watch this video, you could eliminate those mistakes and you could just go straight to making the money. So the typical new investor is gonna wake up one day and say, okay, I have $1,000. How do I get rich? What do I do? So the first thing you're gonna do, you're gonna go on YouTube and you're gonna type in how to get rich in penny stocks, because you're gonna hear from your one friend at work, oh, I bought into this penny stock, I 10x my money, now I live on an island, now I do call options, now I do put options, I don't have to work anymore. You could do this so easily. So you go on YouTube, you'll scroll through, okay, this guy's gonna say how to go from 0 to 100,000, this guy's all in, this guy's penny stocks, he's saying it's easy, this guy's talking about the $10,000 home run, this guy's saying he made $10,000 in 32 minutes. I mean, this is honestly a pretty good thumbnail and I guarantee you most people click on it, but it's probably not the way that most people are actually gonna make money in the stock market. So I'm gonna pull up a 1-year chart of NVIDIA just to show you what the typical new investor does. So the typical new investor is gonna say, okay, I got my new stock watch list, I got NVIDIA on my watch list, I'm gonna see what it does. So somewhere around January of 2024, they start looking at NVIDIA. They say, okay, you know, NVIDIA is kind of going flat. Oh, it took a dip. I don't know, maybe it's gonna go down a little bit more, so I'm just gonna wait. I'm gonna buy when it's lower because I'm smart. But then the market starts going up, and it's going up, 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 up. And they're like, dang it, I should have bought in down here, but I didn't buy in, so should I buy in? I don't know. Oh, the market took a dip. Good, I didn't buy in. I did the right decision. I bought in nothing. Great. Then the market bounces right back, and it goes straight up, all the way up to here. They say, okay, the market's really going up. I don't know how the market's going to go down. It's literally just been turning green days every single day, almost just going straight up, it seems like. So they say, okay, I'm going to buy in. So they buy in, and then bang, the market starts to trend down all the way to here. Took a little bit of a dip. It went from, what did it go from 94 to roughly 76. They say, crap, I'm down almost 20%. I'm selling. I'm done with this stuff. I'm never doing a stock market again. I bought at the top. I sold at the bottom. I suck. So I'm done. Right after they sell, the market starts going back up, 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 all the way back up to here. They get in a similar mindset again. They're FOMO. They're like, dang it, I sold at the bottom and the market's going straight up. Like, this is the time that I'm going to make money. I'm going to double my money overnight. And then bang, they buy into the market at the top and then it just trends down. So this cycle right here is typically how all new investors get started in the market. They want overnight riches. They'll go subscribe to someone like Tim Sykes, who will say, I'm the penny stock millionaire. I went from 0 to $50 million in 5 years, and this is how I did it. So what'll happen is you're going to get all worked up. You're going to want those trade alerts. He's going to text you a trade alert the second that he makes a trade. I'm not going to lie, I've done this before too, and I started out and I lost some money. And that's the main reason why I'm making this video for you, is because I don't want you to lose money. And also in the second half of this video, I'm going to show you exactly what you could do as a typical average Joe investor to make a bunch of money in the stock market. But we have to show you the things that most people do wrong before I can show you what to do so that you could do it right. So back to Tim Sykes, the guy who says it's going to be quick money. You're going to 10x your money overnight. So you're going to get these text alerts to your phone. You're going to try to follow his trade because guess what? He already made the trade. Then he'll send you out a text message or any alert service that you get. They're already in the trade. They send out the message on these penny stocks. By the time that you get the alert and get into the company has already made its move up. That is the problem. Then by the time that you get that alert and then his following starts to buy in along with you, that is when he will go and sell. He's going to use you as his exit liquidity. So on paper for him, it's like he can't lose. He always makes money. He bought in for $10 a share. He sold for $15 a share. He made 50% ROI. But by the time you got the alert, because he put in so much money into this small penny stock, he moved the price from say $10 a share to $12 a share. Some of his friends or maybe people that get the alerts before you get them, they bought in, maybe they got in around $13 a share, and then it pushed the price up to $15 a share. Then by the time you get in, it's going to be $15 a share, but then Tim says, okay, now the herd is coming, they're all going to buy into this company, and then that's when I'm going to start selling my huge position because I need exit liquidity. And for penny stocks, when you try to do that stuff, that's typically what happens because it doesn't take a lot of money to move the price up or down, so they can manipulate the market with no problem. So most new investors will typically follow that to start out. They want overnight riches, they'll lose everything. And I actually just made a post about this today on X. I said the worst thing is when a new investor makes money on the first trade and they get cocky, then they lay their entire life savings on the next one and they get smoked. This happens all the time. New investors wake up one day, they put money into something, maybe they do double their money and they get lucky. Then he goes to his wife, he says, hey, I just doubled my money. She's on board with it. He convinces her that he's smart and he just made money. So then they're like, okay, let's take our life savings, let's try to double this $20,000 into $40,000, and then we could buy that boat that you've always wanted. Problem is, usually when they go make that next trade, that $20,000 will go to $0, especially if you do it extra risky with stock options. I do a lot of trading with stock options, and you have to do stock options the right way, because if you don't, you will get completely smoked out. I have a course that's dropping next month, link below for that. But that scenario right there is one of the worst ones to happen to new investors, because they get this confidence boost, they make a trade, they make money, but then when they go in and try to reproduce that, they just get wiped out. So then a typical investor is going to say, crap, I'm done with the stock market, I'm never doing this again, I'm going to buy bonds or CDs and I'm going to sit on that forever. So let's talk about bonds and CDs real quick. So I pulled up a quick compound interest calculator. I'm going to show you what you'll do in a bond if you invest in it, and I'm going to show you my way of how you can make way more money after that. So let's say you put in $10,000 into a bond for 40 years and you get a 3.5% yield on that bond. So every year you're going to make 3.5%, okay? You're going to have $40,000 in 40 years from $10,000. You're going to say, well, I Forex my money. That's not terrible, is it? Yes, it's absolutely horrible, and I'm going to explain to you why. So I'm going to share you a little secret that most investors don't know, and it's one of the most simple, easiest investment tools to use to make 10% per year in the long run. You don't have to think about it. You don't have to read earnings reports. You don't have to worry about the news or if we're going to war. None of that stuff. You don't have to worry about any of it. You just set it and you forget it. So let's do the same situation, but with my investment. So you have $10,000 you're going to start with, same thing, 40 years. But the difference is that you're going to make 10% per year with my investment, and for the last 50 years, this is what this investment has done per year. We're going to compound daily because the stock market does compound daily, and look at the difference. My way, you're going to have $545,000 from $10,000. So you made one investment of $10,000 and you turned $10,000 in 40 years to $545,000. This is one contribution of $10,000. So would you rather have $545,000 or would you rather have $40,000? You tell me. So the problem with new investors is they go in there and they get smoked starting out, and then they say, I'm never doing the stock market ever again. But it's because you're doing the stock market completely wrong. I'm actually feeling generous right now. So link below, I have my free stock market blueprint. I typed it all out for you guys for the way that the average Joe can get rich in the stock market. It's free. Just click the link below, you'll get it. And my course link is below too if you want to get on the wait list for that. So the investment that I'm talking about is the S&P 500. But before you click off this video, let me explain to you why I bet you that this investment right here will outperform most of the things that you're going to try to do. All these stocks that you're picking, all these options that you're doing, I bet you if I invest in the S&P 500, I'm going to outperform you in the long run, and this is why. So most people think they're a lot smarter than they really are, and they say, oh, well, I'm going to go time to market, I'm going to buy NVIDIA on the bottom, and I'm going to sell on the top, I'm so good, I'm going to be able to time to market twice. Problem is most investors can't do that. So if you just buy into the S&P 500 and you hold it for the long run, you will compound your money typically at 10% per year. But that means you will double your money every 7.2 years. So this just shows you year by year what you're going to do in the S&P 500. So year 0, you're starting with $10,000, but just after year 7, you're going to double your money. And then after another 7 years, you're going to double your money off of that double. So you went from 10,000 to 20,000 to 40,000. And that's why this curve starts to go exponential right here, because you're making 10% off at $10,000 starting out. So you're going to make $1,000. But as we scroll down, around here on $100,000, you're making 10% on $100,000. That's why you have $110,000 right here. So you have to get in on compound interest. This is your friend. You can make a crap ton of money. One of my favorite ways to get exposure to the S&P 500 is with VOO. So VOO is an ETF that tracks the S&P 500, and it does it in a very efficient way with a very low fee. Fees are big when you go into ETFs because fees eat up a lot more of your return than what you think. So the fee on VOO is 0.04, which is extremely low. It's 0.04 of 1%. You don't want to give anybody more money than you have to give them in fees. So this is a great way to get exposure to that. So if you just invest your money, you dollar cost average into the S&P 500. Dollar cost averaging means that you buy in as you have money. So if you get paid every 2 weeks, put a portion of your paycheck into VOO and just forget about it. Don't try to be smart in time to market and say, oh, I think the market's going to crash, I'm going to sell. Don't try to do that stuff. Just buy in all the time. Maybe when the market's a little bit overvalued in this territory, you just buy in the entire time. So when this dip happens right here, you're buying in at a discount. but when the market's going up right here, maybe you're overpaying a little bit, and then when you buy through here, maybe you're getting a little bit of a discount again, and then maybe up here you're overpaying a little bit also. But over time, your price will be average. You will get a fair price. I go more into detail with this in my free stock market blueprint. The link for that is in this video description. Make sure you check that one out. It's totally free. It just upsets me that new investors go in there, they try to double their money overnight, and they just get smoked. And my goal with you guys and with this channel, I want to teach you guys how to invest the right way. You might be able to go make more money doing it someone else's way, but my way, my number one rule is to not lose money and to not get smoked. And if you follow my rules, you probably won't get smoked. There's a chance that anything could happen, and doing it my way, which is the safe way, I went from $0 roughly 5 years ago to now I have over $2 million in my investment portfolio. So if you want to learn everything that I know, I'm making a course. It drops in October of this year. I'm going to teach you all about stocks, all about options, all about psychology of money, because psychology of money is massive. Most people go wrong in that territory of investing. I'm going to teach you all that stuff. You're going to know when to buy stocks, when to sell stocks, how to know stocks are overvalued versus undervalued. There's a link in the video description for that too. Click on that, put in your email, you're on the list, so when you go buy the course, you're going to get that automatic pre-launch discount. If you made it this far too, like, subscribe, and I'll see you guys later.